Welcome back. I'm Pratap here. Today is 19th October 2023. So before we generate daily demand and supply zones, let's look into the high liquidity zones we have published during our yesterday's report. So we got one excellent entry today, Tata Power. Before looking to the Tata Power, let me show you one interesting trade that happened on Nifty 50. And this information is also useful to you how to trade pierced high liquidity zones, because so far we are avoiding high liquidity pierced zones. The reason is already we are getting the zones which are not pierced. What I mean to say, our software is able to find several high liquidity zones on every day. So why we want to focus on the pierced zones? Why we need to take more risk? But the reason why I'm focusing on Nifty is I know the many traders, they do trading only on Nifty and Bank Nifty. At least they should know how to trade even by using high liquidity pierced zones. And we know this daily demand zone, is a high liquidity demand zone, but this is pierced mainly because of a bear trap from the institutions. We have a 75 minutes zone just below this, and which trapped all the bears. The moment the stop loss hit, and whoever shot their long trades at the end of this zone, they all got caught by the institutions. That's why we call it as a bear trap. Okay, after that again what happened? Institutions pushed the price up from here. Price went into this zone, and here institutions, they created a new 75 minutes demand zone inside the pierced high liquidity zone. And this is the origin for the new move. That's why we can take a risk. How we can take the risk? By minimizing the risk as much as possible. So go to the 75 minutes time frame, you will understand. See here, this high liquidity daily demand zone is pierced. From this 75 minutes, this is a bear trap, and institutions pushed the price up. And then again inside this high liquidity pierced demand zone, they created a new 75 minute supply. And this is the origin for the next move from here. And is it a fresh zone? Yes, it is a fresh. And look into this zone where we took the entry. We took the entry at the type 2 distal line entry we have taken. The type 2 distal line. In case if anybody is not aware of type 2 distal line, probably in 1 or 2 days, the next lessons will help you understand this particular concept. Okay, those who are already aware of this type 2 distal line, why we are going for type 2 distal? Because we want to minimize the risk as much as possible. Why you want to minimize the risk? Because even though it is a high liquidity daily demand zone, it is already pierced. That means all the orders in this zone is already consumed. Even then, institutions created again a new zone here. That's why we don't have confidence on this zone. Because we don't have confidence on this zone, we want to minimize the risk as much as possible. You know what is the cost of this risk? It is only 937 rupees for one future lot on Nifty 50. Just 937 rupees is our risk. That level we have minimized this. We have fine tuned this 75-minute zone. But see here what happened today during the intraday. We got an excellent entry here in this candle. This is at 9:35 p.m. If you get into the 5 minutes zone, you will get clarity on the time interval. Actually, at 9:35, we got an entry. And when it reached the target, at 12 o'clock, it reached the target. If you look into the 5 minutes, you will get clarity here. At 12 o'clock, it reached the target. Do you know how much return it has given? 147.5 points return it has given. You know what is the cost? 7,360 rupees on one futures lot. You know what is the return on the investment? 6.6% return on the investment, which is above our average high liquidity return on the investment. Our average is 6.1. So we got an excellent return during today's trade. And risk is very minimal. You know what is the risk reward? It is close to 1 is to 8. For one risk, close to 8. Reward you got 1.78 something. Is almost close to 1 is to 8. Return it has given. And risk also we minimized as much as possible. Just 937 rupees risk, you got a reward of 7,360 rupees. And we got that reward today during the intraday. So how we find the target here? So went to the 15 minutes time frame. So 15 minutes you have a drop base drop. So we took the so we fixed this target. At 12 o'clock candle, it reached the target. But remember, generally we don't trade on pierced zones, but Nifty and Bank Nifty. The reason why we don't trade, because we have so many other stocks we are getting every day. The zones, the high liquidity zones, not pierced, we are getting with the help of our scanner. But those who trade only in Nifty and Bank Nifty, definitely they have to take some risk. So this is one way of, this is a high, what I can say, it is a high risk way of trading with the help of pierced high liquidity zones. So we got a successful trade today. Okay, this is about what I want to explain you about how we can how we can trade pierced zones. The point one is look for a fresh zone inside the pierced zone, and second point is you have to minimize the risk as much as possible. That is very important. If that is the case, in case if your stop loss is triggered, you get a very, very minimal loss. That is acceptable. Okay, now let's get into our high liquidity trade we got from our yesterday's list. Only Tata Power entered into the zone and it gave a good return. Let me open the chart. So Tata Power, NSE, yes. So this is the high liquidity. It is already tested once. So I have to take either deep entry or a fresh 75 minutes demand zone. So go to the 75 minutes time frame. Here we have 175 minutes zone, which is not very clear. This candle looks very big. It looks like it is looking like a failed ERC candle. That's why what I did, it looks like a zone, 75-minute zone, but not convincing. That's why what I did, I went one more time frame below in this area. Now look into the 15 minutes time interval. You got a very beautiful 15 minutes demand zone, drop, base, rally candle with a gap. So now look into this. It went inside this at 9:30 candle, 9:30 15 minutes candle, around 9:35 I guess if I am not wrong. We got an entry here. And what about the target? Because this is a 15 minutes level, either you should go for intraday trade or short term trade, maybe 1 or 2 days. But most of the times, high liquidity zones give good result for at 15 minutes level. During the intraday itself, it gives the return. High liquidity zones. I'm not talking about the normal zones because high liquidity zones are powerful. They push the price at least up to its next 15 minutes level zone. So we have almost 1 is to 2, a little over 1 is to 2 reward. So here we have a drop base drop. Don't think it is a base candle. It is a ERC candle, expanded range candle. It's a very big candle. And what time it reached the target? At 12:45 candle, it reached the target. You know how much return it has given? 8,606. 800, sorry, I'm sorry, 8,606. 8,606 and one futures lot of a futures lot for Tata Power, and which is equivalent to 5.2% return on the investment. It is just a little below our 6.1 average return on the investment, but anything above 5% during the intraday is an excellent return. That is what we discussed even earlier also. Getting 5% return on investment in a single stock is an excellent return. So Tata Power is one successful trade from our yesterday's. This is the only one got the entry and it is a successful. So this is about our high liquidity zones from our previous report. Now let's go to our demand and supply zone generation. For entry time frame daily, let us filter the stocks which are near to the daily demand zone. And these three stocks are filtered where price is near to the daily demand zone. We don't have any uh, high liquidity demand zones. But I do one thing. I will try to generate with the help of the strategy builder. We'll try to filter any stocks at 1% or 2% or up to 3%. We will look into the stocks after completing these stocks near daily supply zones. So let's go back. Entry time frame daily. Let us find the stocks which are near to the daily supply zone. Oh, we got good number of stocks at supply zone. We have high liquidity zone, Bharat Forge, tested only once, and not pierced, but it had 4 rejections earlier. So it has given multiple opportunities at lower time frames. Remember, rejections always give successful trades at lower time frames, at 75 minutes or 15 minutes time interval. And what else we have? We have one more high liquidity zone, conquer, but it is already pierced. Pierced zones also we can trade. That is what I shown you today. But we will avoid if it is Nifty, Bank Nifty, okay, because we have already other options. So why do you want to take a very high risk by getting into these pierced zones? That's why I'm avoiding. We have IndusInd Bank. It is pierced recently. Okay, we have only one stock which is not pierced. So what we do, let us go to the strategy builder and try to find a good number of stocks at different percentage levels. Let us evaluate. So let me go to the top-down analysis strategy filter. Entry time frame is daily and entry zone is a demand zone. Entry zone is demand zone. Our high liquidity type for daily time frame, I am selecting S by R, that is support resistance zones, because they are powerful on daily time frame. We want near the demand zone, right? So that's why I want to select the price direction which are moving from supply zone to demand zone on daily time frame. So supply zone to, yeah, this one. Supply zone to demand zone, price should travel. So currently price is traveling supply zone to demand zone. We want only those stocks. Then only we can find near the demand zone. Okay. At what percentage level you want these demand zones on daily time frame? At least 1% before the zone. So I'm selecting 1. 1 indicates at least 1, the stocks which are at least 1% before the daily demand zone. Because we selected S by R high liquidity zones. But we don't want pierced zones, right? So what I do, I'm selecting the pierced count on daily time frame 0, 0. Minimum 0, maximum 0. So it doesn't generate any pierced demand zones. See, this filter is for the demand zone. So now let's filter. We got 2 stocks. Just 1% before the daily demand zone. One is an index, a Nifty mid cap index, and another one is Apollo Tire. And recently its supply zone is pierced, and 0% indicates generally, when this reward 0 we get when there is an intersection between demand zone and supply zone. Anyway, this is a pierced, so we can fine tune at lower time frame, that is 75 minutes, because the depth of this high liquidity zone is very good. It is almost 4.28% depth is there. So definitely at deep you may find a fresh 75 minute zone because it is already tested once. Okay, in case if you want even more stocks, what you can do? Change this 1% to 2%. Now you got one more stock, Tata Steel. Tata Steel is just 2% before the daily high liquidity supply zone. Already Tata Steel gave one test. Earlier we got a successful trade, I guess during last week. Tata Steel has given a good intraday return also. So again it is about to come to its high liquidity demand zone, which is the currently price is at 2% before this daily demand zone. I mean high liquidity demand zone. So now what we do, let us check for the stocks at 3% level. So this is the max. I don't want to go beyond this. First of all, 3% level itself is a good percent. We don't think tomorrow a stock fell 3% level. But still you can keep watch on these stocks. You can put them in your watch list. We got two more stocks, three more stocks. Bank of Baroda. This is a fresh zone, but it is already having one rejection. That means it gave one entry already at lower time frames. So that's why you should look for a fresh zone at 75 minutes or a deep entry. And Navin floor, it is already tested 3 times. So you can fine tune at the lower time frames or you can take a deep entry on this. Wipro is also a fresh zone. So uh, this is about high liquidity support demand zones. None of these demand zones are pierced. Supply zones are pierced. We don't bother about that. Our concentration is high liquidity demand zones. So they're all not pierced. The pierced count is 0. That is how we filtered. Now what I want to do, I want to look into the other type of the high liquidity zones. Now I'll change S by R to CZ. Actually, CZ is the highest priority in quarterly, monthly, and weekly time frames, but in daily, S by R gets highest priority than CZ. That point you should not forget. So we have one stock, Titan. So this is at 3%, maybe 3% or before or even before that. Because the maximum condition we kept is 3%. And we have one more type, counter trend setup, high liquidity setup, that is TCP. Atul is there. It is already tested once. So it gave already one trade. So you need to look more deep into this high liquidity zone. It is at the equilibrium. So this is about high liquidity demand zones at 3% level. Now what we do, let us select supply zone. Instead of demand zone, supply zone. So support resistance we will see first. And you should also change the price direction now. We want stock which are going to towards the supply zone. Moving towards the supply zone, but they are at 3%. Let us change it to 1%. Let us see any stocks near 1% level. Yes, we have Bank Nifty is there. At resistance supply zone, which is a fresh but is excuse me, but it is already having one rejection. That means at lower time frames, it would have given already one entry. So you have to look for a fresh lower time frame zone or a deep entry. And the Page Industries also zero test, but it gave 4 rejections so far. That means 4 times it gave the entry at the lower time frames. So you should be careful with this. You should look for a deep entry or any fresh zone a little bit deep, probably prefer that. Basically, you need to identify the horizon properly, especially when it is having multi-test at lower time frames. And the risk is also only 3%. Reward is 0% because this demand zone and supply zones are having some intersection. Then only the reward will be showing us 0%. That means both the demand zone and the supply zone, there is an intersection. That means a part of the demand zone is inside the supply zone and a part of the supply zone is inside the demand zone. That is called intersection. At the time, risk will be, I designed my formula in such a way, the risk will be 0%. Whenever you see risk 0, it indicates that both these demand zone and supply zones are intersected. You can identify by observing these values, the zone high and zone low. You will get clarity. So, okay, let us go to the 2% level. Let's go to 2%. And one more stock is added, Cummins. It is having high liquidity zone, tested 3 times already, and it gave us 7 rejections. Excellent stock. I don't know how we missed all these days. See, the risk is only 2.89%. That means it is giving an opportunity. If there is a more risk, one advantage is it gives an opportunity to fine tune the lower time frame zones at deep. When we are fine tuning at the deep and prices are going to the deep, we get more reward. This is one important point you might have observed all these days when I am fine tuning at 75 minutes level. You may not be finding good risk reward at the daily time frames, but the moment we go to the 75 minutes, we are getting a good risk reward. The reason is we are going inside that daily demand zone, a little deep inside. The moment prices reaches that level, they are giving a good reward because it is a high liquidity zones. They are working very well, especially when those lower time frame zones are fresh zones. You should always observe on these points. Okay, this is at 2% level. The price currently 2% before all these this demand zone. Nifty Bank and Page Industry is 1% level. Cummins is 2%. Let us look into the 3% level. That means prices before this 3% reaching the supply zones. Currently, we are looking at supply zones. Now, 3 more stocks are added now. Nifty 50 is also there in this list. Currently, Nifty 50 is just before this resistance supply zone. This is also a counter trend. It supports both counter trend as well as resistance. Excuse me. Nifty Bank. Now Asian Paint. It came to this list. It is already tested once. The risk is 1.32%. Check if there is any fresh zone at lower time frames. And Jubilant Food. It is already tested 5 times, 8 rejections. And the Page Industries. It is a fresh zone, but it has given already 4 rejections. That means it might have given already 4 entries at lower time frames, maybe at 75 minutes level or 15 minutes level. So this is one advantage of filtering the stocks as per strategy builder. You can see all the strategies here. I clearly specified what is the strategy we define. See, entry zone is a supply zone, our high liquidity type On daily time frame is support resistance, and the direction is on daily time frame is moving demand zone to supply zone, and the pierced count should on daily time frame should be 0, and a max price person to reach the zone. Which zone we selected? Supply zone. So the max price person to reach the supply zone on daily time frame should be 3%. That means all these stocks are just before 3%, or maybe it could be 2%, or it could be 1%. But maximum is 3%. That is what. It doesn't mean all these stocks are at 3% level. We have seen some of the stocks, we filtered at 1% level itself. Okay, now what we do, let us search for the stocks, whether we find any new stocks on the other high liquidity types at 3% level. We have CZ type. We have only one stock identified, Ultra Cement. It is already given one test. I think recently it gave the test, one test. Excuse me. And the next one is counter trend setup, that is TCP. See Nifty 50 supporting both the counter trend as well as the resistance. What is the one we got newly? Bharat Forge. And it is also appeared in our stocks near supply zone list. And this is not there in the stocks near supply zone list, IRCTC, but we identified in this list. It is already tested once. And McDowell. It is a fresh counter trend setup. When the leg out? Today only it is created. I mean yesterday, 18th, leg out. So if price reaches to this zone, don't miss it. But risk is 3.36%. You should be very careful to manage. You have to properly fine tune. In case if it is a deep, take a deep. If you miss the entry, okay, no problem. Here, our goal is not missing the entry. Our goal is minimizing the risk as much as possible. If this is the only one stock, yes, we will take a risk. But you have so many options. So why should we bother about it? If we miss this stock, maybe we may get entry in some other stock. That is what we have seen yesterday. We got an entry in Tata Power. Previous day also we got an entry at Apollo Tires. All these stocks are giving returns on every day during the intraday itself. So this is about the stocks filtered as per high liquidity zones at 1% level, 2% level, 3% level before reaching the our high liquidity demand zone or supply zone. Excuse me. So let me stop my discussion here. My throat is not comfortable today, not in a position to speak in a better way, getting the cough. So let's continue from here tomorrow. Let us again meet in our tomorrow's supply demand zone generation session. Thank you.